Hello everyone, my name is Rebecca Young. I've decided to start doing a video series for YouTube because I guess really quickly about myself, I've been an investor in the GTA since 2011, and in light of recent events with COVID and a lot of uncertainty around the market, a lot of my friends that are first-time buyers or first-time investors are looking to take opportunities that we expect to appear on the market. So because of this, I've started getting a flood of the same types of questions from a lot of my friends and and clients as well. So I decided that maybe I would just kind of get these frequently asked questions and do a video series around it. And to kick it off, I figured it made the most sense to start with how do you actually buy a property and how are there differences between buying just your own personal residential home versus looking specifically for an investment. And because that is my specialty, that's the focus I'm going to have in this video today. So just a very quick overview, the folks that you need to have kind of on your real estate team when you're buying a property are a real estate agent, a mortgage broker, a home inspector, a lawyer, an insurance broker, and then down the road also an accountant, so that you're making sure that you are taking basically full advantage of the tax write-offs that you get in an investment property. And honestly, if you get a great agent, then that person should be able to connect you with all those other folks as well. It's a very small industry, especially the people that focus on investment properties in particular. So there's a lot of crossover with teams. A lot of these folks work together on their own deals. So they all know how to work together and how to best support a client who's looking to also purchase an investment property. So if we start off with the real estate agent, what are the expectations and what does a real estate agent actually provide you? So initially you would have kind of like a discovery call or a discovery meeting, like if it's at a cafe or something, or these days probably something virtual as well. And you basically just tell that person, what kind of budget you have, how much money you're willing to put into a down payment, basically what your goals are. So in terms of for me, I look primarily at cash flow. My goal is to basically replace my active income with passive income so that I have a sound retirement fund in the future. So something like that. Sometimes people are looking, closer to Toronto, for example, because there's a lot of perceived security here because of a lot of different industries that create a really sound economy for us. Sometimes it's appreciation because a lot of people really want to live in Toronto, so we see a lot more demand here than the neighboring cities and the satellite communities. But the point being is that you would want to have that conversation with the agent to make sure they understand what your goals are and to make sure that it's also a good fit between the two of you. At that point in time, your real estate agent should refer you to a mortgage broker so you can get a pre-qualification or a pre-approval in a mortgage. So that's when it's not just, kind of what you think your budget is, but you actually go to a broker and they basically take all of your income, they look at all of your assets, and they calculate certain income ratios to figure out, as well as your down payment, to figure out exactly what you could afford every month as a mortgage payment. So at that point in time, you'd work with the mortgage broker, and typically I like to work with folks that are independent. People have different ways of wanting to do this. Sometimes people want to go through the bank, which is fine too if that's your preference. I personally like to go with independent brokers because they are representing your interests, and then they are the ones working with the lenders to find you the best deals, so the best rates, the best creativity if they can push out your amortization, for example, to make your mortgage payments as low as possible, ideas like that. And you basically have the same conversation that you had with your real estate agent, again with the mortgage broker. And then once you get your pre-approval, let's say it's $500,000, then you can go back to your real estate agent and say, yes, I know my budget is $500,000, and I would like to purchase a place in basically whatever city matches that budget and matches what you want to purchase. So for example, if you want to get a condo in Toronto, that might be within $500,000, but as you're going outside of Toronto, your money is going to go further. And if you look at something in the Niagara region, for example, that could be a detached home, right? So just kind of figuring out what different options you have, and that's why it's important to have these conversations with both of these individuals to make sure that everyone's on the same page and that they're able to find exactly what you're looking for. So at that point in time, once you have your pre-approval and you know what your budget is, then you can set up a search with your agent, and then you basically start to go and see properties. I personally like to go out for the first showing or the first round of showings, where I basically look up a bunch of different properties that would meet the criteria of my client, and we actually go out and see all these different properties to really make sure that that's what you're looking for. This is important because it's very different analyzing numbers on a sheet of paper versus actually seeing the tangible asset, and it would also help you determine if you want that condo in Toronto, for example, or if you actually want something in Niagara, if you want like the full detached property. And then at that point in time, I always recommend, doing that first initial round of showings just to get a feel for the market. And then at that point in time, you set up a regular search, and just as properties come up, then you go and see them with your agent. Again, depending on where you're looking, if it's something in Toronto, for example, I highly recommend that you work with your agent to get an hourly search set up. It's still a very competitive market, especially as good properties come up on the market and everyone's really interested in them. You want to make sure that you can get to that property as quickly as possible and get the ball rolling if your client is interested in that property. And then at that point in time, let's say you found your dream property and you put in an offer. So typically for a first-time buyer, especially as an investment property, usually there's two conditions that you would have in your agreement of purchase and sale. So typically those conditions are your financing condition as well as your home inspection condition. And these are very important because if you're going to be buying an investment property, it all comes down to making sure that you have a well thought out and planned analysis of exactly what money you require to make sure that you can acquire the property, and in terms of your ongoing operational expenses as well. So home inspectors, very, very important, very critical of making sure that those people will help you identify if there's any potential issues in the property. And so on one hand, it helps you determine how much money, again, you're going to need. So say if the roof is, the shingles are starting to curl up on the roof, for example, that's something you want to be aware of, because that's an indication that the roof is starting to go and that you're going to need to budget in replacing that. But then on the flip side, working with your agent, they can go back and negotiate further on your behalf to say, we love the property and we think if it was at a good state, then we would say it's comparable to others in the market. But with the roof that might cost $10,000, we don't think that should be brought into the price, basically. So it also gives your agent some more negotiating power. And then in terms of the financing condition, it's again very important to include this because assuming you're working with a good agent, they should be able to tell you what the comparables are in the area and tell you what the property is worth. But some people get emotional, especially in Toronto. There's a lot of bidding wars that happen, so there is a tendency for people just to throw money at it just to try and acquire the property. Now the problem is that if you have to get an appraisal done as part of your financing to finalize it, if there's a difference between what you are offering for the purchase price versus what the property is appraised at, that delta has to come out of your pocket. The bank isn't going to give you any more money because you've overpaid for a property. And it's important for you to know this up front. So basically, those are the two conditions that we typically see. You'll see more in the different schedules in the agreement of purchase and sale, but those are the two that you would need to waive those to say that, yes, now we have a firm deal. So once you have waived your financing and your home inspection conditions, then you have a firm deal. So at that point in time, we've worked with the real estate agent to acquire the property and to get a firm deal. We have everything confirmed through our mortgage broker to make sure that we're going to get the financing to close on the property. And then at that point in time, you need to find a real estate lawyer to actually complete the transaction for you. And they also work with the seller's lawyer as well to make sure that there's a seamless transaction as much as possible. Now, before you meet with the lawyer and you fill out some paperwork. Sometimes there's you have to pay for a retainer, which is just basically just confirming that you're going to be using them for their services and gives them some money upfront as kind of that commitment. And once that's happened, then you also want to work with an insurance broker to get insurance for your property as well. Now, again, this is a situation like the mortgage broker where you can go through the bank. But I would, again, highly recommend that, especially for an investment property, you work with an independent person. And the reason being is because they are, again, shopping on your behalf. They are working within their industry, within their network to find you the best insurance package to not only give you the best monthly rate, but also, and the most importantly, is to make sure that you have sufficient coverage so that if anything happens with the property, that you can get your money back out of the policy. So an example of this would be, a lot of people want to save money, and I've seen it before where there have been flooded basements, and if somebody didn't pay the extra to have that insurance built into their policy, then you're SOL and you're responsible for fixing and repairing the flooded basement. So then when you're working with an insurance broker, and if you ever do have a problem, they're going to make sure that they're working with the insurance companies to make sure that you are actually getting paid out on the claims that you're entitled to as a part of your policy. So it's very important to have somebody, again, on your side and representing your best interests when they're working with this industry, because they work with it day in and day out. So for me, I always recommend that, and I would recommend that to my clients as well. Then the last person that you need to have kind of on your real estate investment roster is an accountant. And so again, a lot of us, especially if you have just typical T4 income, usually your tax returns are actually pretty easy to fill out. There's TurboTax, there's H&R Block that you can go, and it's pretty cheap and easy to get them done. When you start investing in a real estate property, there's a bunch of different expenses that you can claim. There's capital cost allowance, which allows you to deduct depreciation of the property that you have. There's a lot of different factors there that I personally think it's worth it to work with a good accountant that's dealt with these things before, to make sure that you are getting the best return you possibly can. And it's also very important to me that I work with tax accountants that personally own real estate themselves, or even for, like a lot of entrepreneurs out there, it's also important to me that I'm working with somebody who has owned their own business and just understands how all this stuff works, and that they're looking out for your best interests and making sure you're getting the best return that you can. A couple other considerations when you're looking to build this real estate team for yourself is networking with good contractors. That's really important. When you have those relationships and you know that somebody does good work, it's just somebody reliable that you can keep going back to, and there's no surprises when it comes to payment. Or sometimes I've seen it happen where jobs will drag on, there's a lot of scope creep, and then people are paying a lot more than they expect, or the quality of the work isn't up to the standards that the clients are expecting. So it's important to consider that in terms of, especially the more expensive jobs like plumbing or electrical work or a roof, for example, making sure that you've got good people that you can rely on, and that they're going to take care of your investment. And a big part of that as well is, especially if you're looking to really get into investing in real estate, and you're looking to do, especially if you're looking to do more than one property, it's really important to surround yourself with other people that have done this. It's great to be involved within a community where other people are also investing in real estate. So if things come up in the future, you've got somebody to reach out to within the community to ask for, referrals to contractors, for example, or, if there's someone that's not really working well on your real estate team anymore, maybe you need a new insurance broker, for example, maybe someone's moved out of province and they can't support you anymore, then you, again, have your community that they can help you with that. And also just for a bit of the moral support, because there aren't a lot of people out there that are investing in real estate. And so there aren't a lot of people that really understand, there's always going to be some nuances that come up, or just that really understand your goals of wanting to own more properties, for example. And it's important to surround yourself with people that understand the vision and keep encouraging you on that path. So for me, that's been essential for my progress and my growth as well. So that's basically the overview of what I consider my real estate investment team. And if anybody has any questions about that, if they want to dig into it further, or if they're looking for any of those individuals themselves, please feel free to reach out. I'm more than happy to have the conversation with you, and I'll leave my contact information below the video. All right, thanks so much, guys. Take care.